changed, but the broader markets are seeing cuts, and you're seeing the mid-cap index that's down currently, and so is the small-cap index. In fact, the mid-cap index losing about 0.4%, and the small-cap index down about 0.75% or thereabouts. And the story really has to do with public sector entities and public sector lenders at that. So look at the PSU banking index. It is the worst performer in the sectoral indices today. It's down about 3.4%. And the entire PSE basket, the Nifty PSE, is down as much as 2.3%. You're seeing the likes of REC as well as PFC losing ground in trade today. Also, of course, REC has gained quite significantly in recent weeks. But all of this has to do with a proposal for a regulatory change that would increase the provisioning requirement for all lenders that are involved in project financing. To talk about what this is all about and then to talk about the stock impact, let me first introduce Harsh Saitas. Harsh, what can you tell us about this regulatory proposal and how significant would this be?
First off, Alex, it's in draft form, so not yet final, but the impact is going to be that instead of 0.4% of the asset that or the lending that you do, you will be providing for almost 5%. In a phased manner, of course, the increase is going to be in a phased manner, but if you're a lender, you're going to have to provide for 5% upfront. The phased manner in which you will do it, first off, in year one, which is FY25, the proposed number is 2%. Thereafter goes to 3.5% in FY26 and the full 5% FY27 onwards. The impact of this is clear. It will impact profitability first off. In terms of quantification of the impact going forward, your profits may get impacted and therefore your capital adequacy may get impacted because most of these lenders, something like an REC, PFC, IREDA, are looking at organic profitability to fund their growth, and therefore your capital adequacy ratios will shrink, which may require them to raise money, is what Bernstein seems to suggest. In fact, what Bernstein also seems to suggest is nearly 50% of your profitability will get impacted. As much as 50% of your profitability may get impacted, project specific, due to some of these norms. What this does to pricing in the industry is another question altogether, which none of the brokerages have actually addressed, because it might just also impact pricing in the industry. Some of these players are largely the only players which are funding projects like this, and therefore they might also increase their pricing to accommodate for some of these regulatory changes. So that may still need to be explored. But outside of that, it's the capital adequacy and the angle with regard to profitability, which is currently the concern on the street, which is why you've seen those sharp reactions on the stocks.
All right. Thanks so much, Harsh, for getting us those details. Gaurang Shah as well as Gaurang Shah is joining us, and we've also got Rajesh Palvia joining us this morning. Thank you so much to the both of you for taking the time. Gaurang, I'll come to you first. What, according to you, could be the implications of this? We've already spoken about the latest update, but it would be significant for these companies, right? Quite a few of these stocks have run up quite significantly in the recent past.
Thank you, Alex, for having me on the show, and morning to all of you all. So, draft guidelines, which mentions 5% general provisioning and, of course, the implication of it. Now, as a knee-jerk reaction, we've already seen PFC, REC and IREDA stocks correct from the highs that we've seen. And you rightly mentioned, all these stocks have rallied anywhere between 150, 200% or more over the last 1 year. So these are draft guidelines, Alex. And let me say one thing over here. I think with the kind of new power generation capacity that the government is talking about, eventually the thought process will boil down to how viable this particular draft guidelines is going to be, number one. Number two, what is going to be the impact in terms of the projects that are existing and which are likely to come up. And as we all know, anywhere between 350 to 500 gigawatts is the new capacity that the government is talking about in the next 3 to 5 years, most of it which will be solar and wind. So, and if this has to come through, then eventually the cost of the cost is going to go up because it's going to be passed on to the end. So I think there is going to be a little bit of introspection that will happen. And before it is implemented, I think there might be a little bit of tweaks and changes. regulators and authorities will possibly want to sit down and think about this particular proposal. But if it has to go through in totality, then definitely there are headwinds for some of these companies.
All right. Thank you so much, Gaurang, for that. Let's dive into the queries. And before we do that, I'd like to remind you, you can write to us on the WhatsApp number that's on your screen. You can also write your queries through the YouTube live chat or through any of our social media channels, and we'll take them from there. Now, let's look at the first question. This one's on Coforge. This one's from Rakesh, and they want to know a longer term view on something like a Coforge. Gaurang, coming back to you on this, the stock has fallen about 13% in the last 6 months. The commentary within the sector isn't extremely positive from where we stand. But on something like a Coforge, what would you suggest to somebody? Good time to buy?
So, Smriti, I think numbers were below expectation, and that's exactly the reaction that we've seen on Coforge post the numbers announcement. Now, one has to understand whether this, and of course the acquisition that they did, that was also a little bit in the limelight. One has to sit down and understand whether this is going to be an impact which is going to have a long-lasting effect, whether the numbers are going to be like this or maybe a little bit on the downside for a couple of quarters to come by. We don't think so. This is one stock, Coforge, amongst the mid-cap IT names, which has also given a fantastic performance over the last year, 2.5 years kind of time horizon, or even 3 years time horizon. We are maintaining an accumulate stance on Coforge as of now. We have a fundamental coverage over there. And we believe that these headwinds are temporary in nature, and it will not have a huge meaningful impact, at least in this new financial year, which has kicked off 1st April 2024. First quarter may see a little bit of subduedness in numbers, but second quarter onwards, things should start looking a little bit more positive for Coforge.
All right. The next question that we're taking is, I'm trying to understand if this is Cholamandalam Finance or Cholamandalam Finance Holdings. I think it is the holding company that Sarvesh from Coimbatore is asking about. I'm not too sure about the buy price because it seems unclear. But he's got 600 shares and he's been holding for some time. On the charts, Rajesh, he's wondering whether to hold at this juncture or to sell.
So, if you analyze the Cholamandalam holding, stock is in consolidation range. If you analyze on the weekly as well as on the monthly chart, since last 5-6 months, the stock is moving in a very tight range. Looking at the near-term, short-term structure, 1200 is the immediate supply zone for the stock. Once the stock manages to take out this 1200 zone, then possible rally can extend. Though overall long-term structure is bullish, so he can hold on the position with stop loss of 1080. That's the important level for near-term structure. So if it continues to hold above 1080, there is a high possibility that sooner or later there could be a chances of a breakout above 1200. Then possible target we could see towards 1300 to 1350 also.
I've just pulled up the longer term charts and the buy price seems to be around 407, which is quite the attractive buy price if you look at the longer term performance of this stock. Would it still be the same recommendation, Rajesh?
Yeah, I think he can hold on as overall structure is bullish and the stock is consolidating at a higher band of this rally. So I think after consolidation, there is a high possibility that stock may attempt to give breakout on the higher side, and then possible rally can extend toward 1350 also. So he can now trail the stop loss at 1050 to hold the position.
All right, Rajesh, the next counter we're talking about is IDBI Bank. This one's from Shashank from Jaipur. They say they want to view from a perspective of 6 to 12 months. Now, the shares have, we've seen a positive stock reaction today as well after the fourth quarter earnings. But from a 6 to 12 month perspective, do you have a certain target on the counter?
So stock is in upward momentum since last couple of months, and looking at the near-term, short-term structure, stock is now struggling to cross its multiple supply zone, which is placed at around 93-94 zone. But overall structure for the stock on the short to medium term perspective is on the bullish side. So we believe that once this breakout happens above 93, 94 level, then yes, there could be a high possibility to for upward target towards 120 to 125 also in the stock. So he can hold on the position looking at the near term, short term, as well as the medium term structure. Stock is in bullish trajectory. So if it continues to hold above 82 rupees, then yes, possible target in the 6-month time frame we could see towards 125 also.
Okay, this next question is on Coal India. It is a relatively shorter term question, but it is about the results. And so, Gaurang, Sujay from Kolkata wants this view. What's the perspective on Coal India? Because we've had this conversation in the past. You alluded to the generation of power at the start of the show today. Thermal power is not going anywhere. And as the largest producer, supplier of coal, one would assume that the earnings trajectory for Coal India is looking good.
So Alex, we had a report also from the Ministry of Mining that the captive capacity of most of the names in terms of purchasers or clients of Coal India have started the commercial operation of captive capacity, which is going to be an overhang for a company like Coal India in terms of the demand coming into future. That's point number one. Point number two, Honorable Prime Minister has also spoken about reducing carbon footprints, in which I think usage of coal in the distant future is going to be on a lower level if you have to achieve towards your targets. Quality of coal and output is improving, and they have added number of washeries also, which has resulted into tremendous amount of positivity. E-auction of coals, realization of better prices, etc., is going to be a positive in the immediate future. And of course, export positive, possibilities will also keep the numbers on the positive side. So currently, we are maintaining a positive view on Coal India. Our targets are somewhere close to about 500 odd rupees. So when it gets there, you can possibly revisit the stock.
All right. The next question is from Anush Patel. They're talking about two counters here, Engineers India and CG Power. They want to know if this is a good time to enter these two counters. And this is from a longer term perspective. Gaurang, would you suggest entering these two counters? And if should you wait maybe a little bit? And if you have a certain buying range also on this?
So, waiting on the sideline, Smriti, is always something which ends up not taking the plunge. Now, on CG Power, to be very honest, we had a coverage on the buy side earlier, but post that our targets are in place. So we have a sell recommendation on CG Power. On Engineers India, we have fundamental coverage where we have an accumulate rating on Engineers India. So I think if you want to take an investment call, don't put all your money at one time. Start at current levels in Engineers in India, I'm talking about, and possibly at lower levels you can accumulate. On CG Power, I don't know whether this caller or investor has already taken a position. In case if he's already have a position in CG Power, then my advice would be to take money off the table.
Okay, fair point. The next question is on frontline companies, Reliance Industries as well as Larsen & Toubro. I'm reading off the screen. This is a question from Prasanjit Ghosh. He's writing from Howrah. He's asking, why are these stocks declining? Should he hold or reduce or add for the medium term? And what are the prospects? Rajesh, I'll come to you on the charts, because if I look at Reliance Industries in particular, it's had a decent 2024, hasn't it?
Yeah. So Reliance Industry is in a corrective phase on the near-term time frame. Yes, there is some supply pressure is taking place around 3,000 kind of level. But if you analyze the long-term structure, it's in bullish trajectory only. Though there is some corrective move is taking place since last couple of months, but if it comes around 2,800, 2,780 kind of zone, that's again attractive level to re-enter in the stock, as long-term structure for Reliance Industries is looking bullish, and we believe that once a stock manages to take out about 3,000 level, then possible really can extend towards 3400 also for Reliance Industry. So I think buy on dip should be your strategy. Wait for some corrective move. Though market is already volatile. So I think if you get any opportunity in this volatile market towards 2800, 2760 kind of zone, that's again attractive level to re-enter in the stock for Reliance Industry. L&T again the same behavior. Since last couple of month, stock is showing some bit of profit taking, but if we analyze the overall long term structure, it's in bullish side only. So here also we have the similar strategy. Buy on dip should be your strategy. On the downside, 3400 is the a good level again to re-enter in this stock in the corrective move. So 3400, 3370 are the range where one can buy and accumulate again in the decline. Keep your stop loss at 3340. On the higher side, 3540 is the immediate supply zone for the stock. If stock manages to take out 3550, then possible really can extend towards 3600 to 3700 also for L&T.
All right, we'll slip into a short break now. Stay with us, Gaurang and Rajesh, and we'll take more questions on the other side. Welcome back. You're watching Ask Profit on NDTV Profit. Let's get back to the queries. This one's from Swastik, and we're talking about the counter Biocon. Now, they bought the shares at a price of 250 rupees, and currently it's trading over 300 rupees. A bit of a downturn today, down about 0.5%. Rajesh, I'm going to come to you on this. If I remember correctly, 2 weeks ago, we saw huge volumes in this counter for a week, 5 days straight. And now that has started to reverse again. What are the technical levels that you should watch out for on this particular counter, and would you suggest booking some profits?
So Smriti, stock managed to give breakout of almost last 2 year consolidation range, and looking at the monthly structure, stock is moving in upsloping channel on the monthly chart. That clearly shows that yes, there is a upward trajectory still there for the stock. Though stock is in ban period for F&O side, so there is some a price consolidation is taking place. Generally, we see when the stock comes in F&O band, then stock momentum goes on the sideways. The same kind of behavior is happening in the Biocon. But as he has already bought at lower level, he can now trail stop loss towards 290 kind of zone. If it's hold 290 level for next couple of weeks, then possible rally can extend. And once the stock manages to come out from the F&O band, then yes, possible rally can extend towards 330 to 340 also, as overall structure for near term to short term is looking on the bullish side.
Okay, fair point. We spoke about the power financiers at the start, Gaurang, but this is a specific question from Jeet. He's writing in from Kolkata, and he's bought PFC at a price of 404, and he's got 100 shares. He's taken a bit of a knock in trade today because of the kind of decline that we're seeing, but he's got a perspective of the next 2 years. What should his strategy be?
So, Alex, let me give a perspective on the entire sector for the benefit of all your viewers. PFC, we had a coverage. Currently, we don't have a coverage. So, this is not a specific comment on PFC. But, as I mentioned at the beginning of the show, if we are going to add on capacities in terms of power generation, if India is going to become a manufacturing hub, if customers, individuals like you and me, we are going to consume more power, if summer temperature is going to go the way it is going to go on the higher side, definitely the demand is. So the point is that, and not to forget the rally that we've seen over the last 1 year, like we said, 150, 200% or more on some of these names like PFC, REC, IRADA, etc., etc. So near-term headwinds are there. Whether the authorities are going to sit across the table and introspect about this particular 5% general provisioning and its impact on the oncoming power projects, finally the cost going up, etc., is something we'll have to wait and watch. Unless and until we have that clarity, these names may go into bouts of correction. And as and when we have the clarity, you will have the impact on the positive side also. So unfortunately, we don't have coverage, but we as a brokerage house remain extremely positive on power generation, power transmission, power distribution, and power financing companies. We believe that's a good play to be. Unfortunately, the news has come, hence the volatility, and we need clarity.
All right. Next counter we're talking about is Deepak Nitrite. This one's from Rajesh Maheshwari writing in from Singapore. They say they bought the shares at a price of 2,200. Now, the shares are in an uptrend today, up about 4.5%, I believe, on the back of a Morgan Stanley note that has increased the target price to the upside potential of 20% there, and a rating from underweight to overweight. Rajesh, do you also see this sort of upside in this particular counter from a 6 months perspective, and if there's any target that you have on the counter?
So yeah, definitely, Smriti. If you look at the short to medium term structure, stock is now breaking out of last 2 year consolidation range. Looking at the overall structure, yes, we do have bullish view on the stock, as the stock managed to break out above 2490 zone. So if it continues to hold about 2490, yes, there is a high possibility that stock may exhibit good amount of rally in coming months, and possible upside target we could see towards 2750, even 2800 for the stock. So as he has bought at lower level, he can hold the position, as stock has already given a breakout on the near term as well as on the short term structure. So keep trailing stop loss now towards 2460 to hold the position. Possible upside in next couple of months we could see towards 2700, 2750 kind of zone.
Okay, this is a question from Nidhi, and she says that she's a novice investor. She started only last month, and she's identified IDFC First Bank as a stock to buy from the perspective of definitely more than a year, and therefore a slightly longer term time frame. She's asking if it is a good business, a good bank to buy. Gaurang, what's the perspective here?
So fundamentally, we have a coverage on IDFC First Bank, and first of all, welcome to the community of investors at stock market, Nidhi. Only thing is, please remember that investments in stock market are exposed to all kinds of risk internally and globally. So you need to have elevated risk appetite in case if you decide to invest. Have a longish time horizon, buy quality, don't buy quantity. Before buying any stock, like you've asked questions, have some clarification, understand where you're investing, and have a longish view. From a long-term point of view, I would say don't put all your money at one time, since we expect a little bit of pullback in the markets in this entire month of May and before the outcome of election, Alex. So start at current levels, and on dips you can go on adding it.
All right. The next counter we're talking about is Canfin Homes. This one's from Raghuram Patro from Bhubaneswar. They say they bought the counter at a price of 655 rupees. It's currently trading at 764 rupees. Rajesh, I'm going to come to you on this one. What's the short-term view on this?
I think he can hold on the position as stock is consolidating after really it's moving in very tight range of 720 on the downside. On the higher side, 790 is the higher band for the stock for this consolidation. And looking at the overall structure, we believe that yes, there is a high possibility that the stock may attempt to view breakout on the higher side once stock manages to take out above 797 95 kind of zone, then possible really can extend towards 850 to 880 also. So for short term view is on the bullish side. Keep your trailing stop loss towards 735, hold your position, and possible really can extend towards 840 850 zone.
Okay, coming back to you on HCL Tech, and this is a question from Nagendra. Would you buy at this current level?
I think in most of the IT stocks, yeah, so there is a corrective move is taking place in most of the IT stock. HCL Tech is again also in the correction. Now looking at the near-term structure, there is a high possibility that stock may attempt to take supports around 1330, 1320 kind of zone. That's the important level in this decline. So I think he should review around 1330, 1320. If it's hold those levels, then yes, he can buy the stock with very small stop loss of 1290. And again, in the pullback, the major supply zone is still placed at around 1440, 1450 zone where he can book profits.
All right. Unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Gaurang and Rajesh, for joining us today and for answering questions for us. And viewers, hopefully we were able to take your questions, but if not, we'll be back tomorrow and take more questions. But don't go anywhere. We have lots more lined up for you on the other side. Stay tuned.
everyone, welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade on have been the flavor of the season. But for now, we take a very quick look at the markets, and they're looking not bad at all. After the initial volatility, we have seen some stabilization as far as the benchmarks are concerned, with the Nifty now up by 0.2% and the Bank Nifty advancing and has reclaimed the mark of 49,000 at the moment, up around 0.4%. Let's take a look at the constituents of the Nifty and see where there is a pull and push coming through as far as the index is concerned. And I reckon that Kotak Mahindra Bank will be on that list where we have seen advances coming in, of course, reacting to earnings there. And besides that, we have TCS as well as HDFC Bank, along with Infosys providing a bulk of your gains coming through. What's on the losing end, of course, we do have something like a Titan and an SPI, which is weighing down on the indices, along with Reliance Industries to a certain extent. So, 150 odd points upwards, countered by 110 odd points downwards. That leaves you with the balance of, marginal green as far as the Nifty goes. In terms of the broader markets, that's where the underperformance is now. So both the benchmarks, the mid-cap and the small-cap indices are in the red. They have recovered